Hey everyone, and welcome back to Your Money, Your Life podcast, episode 182 of the podcast. Before we get into it, wherever you're listening, make sure you like, subscribe, 5-star, give a rating and a review of the podcast. And if you're watching on YouTube, hit the notification bell so you know every time I drop a new episode. Last week, we started with the story before we got even into the podcast. There's no story this week. Fortunately enough, there is no crazy story this week. So we can dive right in to what is going on in the markets. First and foremost, that's where we're going to go. First and foremost, we're going to go to the markets. It's again an interesting 2023, an interesting and good 2023. Remember, we tried to tell people that if we look at a chart here, that when markets pull back from highs, you take opportunities. And some people did, some people did. I'll give some people credit. Some folks did, but a lot of folks didn't. They wanted to stop saving here. They wanted to say the market was going to go to zero, which it never has, never will, unless the world is over. They wanted to say a bunch of stuff, but they didn't want to do the right things. But some people, I will give them credit, they understood opportunities. But now you're seeing a lot of people say, oh, buy this, buy that, Microsoft, Tesla, because of course, in a bull market, everyone gets really confident that things will just always go up. That's not the case. Now you don't want to start hearing advice from other people and giving directions on what to buy just because it's a bull market again. Not the time to be trying to go everything in, all in. Oh, buy this. I heard this happen, or oh, buy this. No, folks. Just do what you were doing prior. Don't get too euphoric. That's not the objective here. Not the objective at all. So if we look at the market though, and what happened over the last call it week, pretty big thing here is one of the big things we want to touch on is just the fact that the Fed again came in with more information on rates, right? So we'll go into what the Fed did with rates, which is they raised rates again by 25 basis points, a 0.25 point increase. If you look at this chart, this is a roughly 4 or 5 decade chart of the federal funds rate. Remember, the 70s, we had incredible inflation, late 70s. And that's why the rates, you think 5-6% is crazy. It was like 18% back then. And then you had, of course, the recession. The 80s were crazy good times, of fun, wealth, everyone getting rich, of course, and still kind of continued a little bit in the 90s, but you had a brief recession in the early 90s. And then, of course, good times again, tech boom, late 90s, early 2000s, which that bubble burst. And then, of course, you had rates. When bubble bursts, rates drop. Bubble bursts, rates drop. If rates are dropping, it means things aren't great, right? And then, of course, after the tech bubble burst, things were okay. Rates were increasing, things going all right. Then we had the housing credit crisis, boom, rates drop, recession. And then we had a long period of good times, man, almost over a decade of good times, which is not normal, right? The average is give it 7, 8 years, sometimes at 9. But to get the 10, great times before the pandemic burst and the brief recession. And now we have rates rising again, and people again are considering, do we have a recession coming up? But if we look at what the Fed said yesterday, they said they're going to increase interest rates to the highest level in 22 years, and they left the door open for further action, but they took out, they kind of got a little bit softer, a little bit dovish, saying that they may or may not have to raise rates again, but it's a possibility. And the market is, pretty much predicting a potential pause, in rates in the September meeting. So that's the big thing that we saw. And we're going to get more data on inflation, more data on core, and more data on headline inflation in the next month or so. And so, yeah, Paul had some comments about inflation repeatedly proved stronger than we and other forecasters have expected. And at some point, that may change, but they have to be ready to follow the data and be a little bit more patient, as well as resolute, as well as let this unfold. So pretty much saying just wait and see. And they have the ability to wait and see and pause and do what is necessary to combat inflation. So that's going to be to be seen. But if you see here again on the year-to-date chart, the S&P 500 really, really strong, 18% up. Again, you're seeing euphoria coming back. People wanting to trade. You're probably going to see again the lessons learned in 2022 will be quickly forgotten when euphoric emotions jump into the fray. People start trying to day trade again, saying they're going to quit their job and just invest, and then that will, that's going to happen again. Mark my words, people are always looking for the really short, quick pill, which there is none, right? There is no quick way to do things. You got to do things the hard way. You got to put in the work. You got to put into the work. Speaking of more market stuff, Meta's earnings came out and it was better than expected. They're up 10% in pre-market trading, but double-digit revenue growth for the first time since 2021. Again, ad revenue coming back, people spending on ads again. It has strong quarter. That's just pretty much how to put it. Monthly active users 3.03 billion versus 3 billion. Average revenue per user up, daily active up. So yeah, that is a strong quarter, and a company that's kind of came back after 2022 getting crushed. It's had a strong resurgence, and you saw Threads, which is the new Twitter-like application. I saw a story about what happened when people 15 celebrities join Threads, and what they're doing. So it says that Ellen DeGeneres has joined Twitter in 2008, has not tweeted since April when Threads rolled out. She was among the first 3,000 people to download the app, which is kind of interesting. And so other people seem to like it. The celebrities and different folks seem to like Threads, and here's a breakdown of people's posts on Twitter versus Threads. It looks like you're seeing Threads kind of pop up as a place for people to post and potentially overtaking Twitter, especially among certain celebrities. um Interesting enough to see the trends. That's going to be huge, as far as where, if they're on there pretty heavily, that's going to shift their audience, their viewers, their influencer, or they're obviously influencers. And so that's going to have a big effect. With that, I think I had a story on the Twitter change. Twitter is now X. It's now X app, the everything app. This is something that um Elon Musk had hinted towards for a while now, and he's made the change. The logo for Twitter's handle is now just X, and they're rebranding, and it's a complete new look. The company's official handle is at X and has replaced the old Twitter handle, which is now inactive. As part of the changes, Twitter's Blue subscription service is now at X Blue, and support and API related handles have also been tweaked. Yeah, people have been on the fence about this change. It came abruptly. It was, I don't know if it was handled the best in the sense of like a reasoning for the change. He has hinted at it, but I mean, you built up what Twitter has 15 years, 10, 15 years of brand recognition, of intangible brand value. And he just changed it. Now everybody's on board. I mean, even his, legit supporters are not on board. Some of them. Um, oh, interesting. I'm reading that the original owner of X wasn't forewarned or compensated, but received a letter that offered merchandise and a tour of X's headquarters as a reflection of appreciation. So, with these Twitter handles, if you go on a new site and you grab the handle of some that's a celebrity or whatever, a lot of times in the old days, the celebrity would have to compensate the person that grabbed the handle first. But of course, if you own said X, or formerly Twitter company, you can just grab the handle and tell them, hey, come to our headquarters. We'll give you a tour. Here's some merchandise of X. Um, so yeah, it's really, really hard to keep up with what's going on with X. But yeah, I mean, hey, Meta made a change to the overall holding company, which is obviously Meta versus just being Facebook company. So interesting to see those changes. We'll see how it pans out. I'm on the fence on that one. I don't know if it makes the most sense, but we're gonna see. We're gonna see. Let's keep going in more news. I thought this was an interesting story. GDP growth likely slowed. Remember, we talk about GDP a lot, which is a big barometer of just productivity in the economy domestically. Um, Gross domestic product is expected to have grown at a slower pace in the second quarter. So the forecasters, economists see the economy expanding at an annualized pace of 1.8% between April and June after 2% increase in the first quarter. So there's continuing signs of economic strength, robust hiring, and receding inflation, but still very, very persistent and troublesome. But many economists have dialed back calls for sustained economic contraction for this year. Remember in the beginning of this year, it was like recession, recession, recession. Even I was, on the fence that there more likely will be. Now it's looking like we're pushing it back to the end of this year, early next, as for the earliest times of recession. And that means growth slows. You'll see a lot of more Main Street layoffs, meaning your manufacturing, your any of those sort of Main Street jobs outside of tech and Wall Street who have already tech already did theirs and Wall Street's in the midst. You'll see a lot more Main Street cuts. And that's going to really, really be, a big driver of some things. So yeah, people are not forecasting recession in 2023 anymore, it looks like. So we'll see when that pops off again. I think it's going to be end of this year, early next, last quarter this year, early of 2024. That would be the best guess as of right now. So we'll see. And then again, we talked about Meta already. We talked about X. Yeah, there was really a slow news day, a slower news day. One thing that was interesting is UPS has created a deal with Teamsters. So the union went against UPS. There was about to be a potential strike, but they ended up reaching a deal. And I guess in the grapevines, the union and people within the union are saying they pretty much got everything they wanted from UPS. Covers 340K UPS workers. It would have been one of the largest and costliest strikes in U.S. history. The deal features a 48% raise for part-time workers and a $7.50 an hour hike for all union employees over 5 years, 7,500 new full-time Teamsters, and finally AC and delivery vans. Wait, they didn't have AC? Is that why the doors are always open? That's weird. Oh wow. That is, I'm glad they got the AC and the delivery vans. That was much, much needed. Um, yeah, that's crazy. No AC. Why are the doors always open? That is something I really, really want to know. Really, really want to know. We had some other big companies that revealed earnings. Microsoft had decent, strongly quarterly profit. It was down, yesterday. Google had a strong quarter, up on YouTube ads, up on cloud growth, and the market really, really liked what they saw, and they beat expectations. And they had actually really, really strong trading day yesterday. Search revenue was growing as Googler still outweighed Chat GPTers. That's what I said. I said that Google would win this AI fight, and I'm being proven right so far. They just have more data, better, stronger, infrastructure to do a great job. All right, folks. I did see that's a big movie weekend this past weekend with Barbie, Oppenheimer, both coming out. We did see Oppenheimer. Me and the fiance did see it. I loved it. It's another classic Christopher Nolan. I would say it's not as great as like a Batman or any of those, but it's not bad. It's not Tenet, which is not great at all. It's above average, and it's a really good movie. I really liked it. It keeps you on the edge of your seat the whole time. You have to follow along though. Of course, with these movies, you have to follow along. They move at a quick pace, and it's a good 3 hours. I didn't feel like I was sitting there for 3 hours, even though I was. You didn't feel like it because it's such a good movie. So that's the one I saw. But the girlies, they're out there seeing Barbie, and this is great. There's people have done a deep dive into the marketing campaign of Barbie because it's been phenomenal. You can't go out without seeing people wearing pink, people taking pictures in front of the Barbie plastic box. They did a great job. They put 100 million into the marketing, and it's paid off because it looks like Barbie brought in 162 million domestically and more over worldwide, and that's just this weekend. you're seeing such a crazy, crazy marketing campaign that's worked really, really well. Hats off to them. They've done a great job. Um, Snack fact of the day: Americans' personal savings have plunged 5.5 trillion since April of 2020. Excuse me. That's not a fun stat for a lot of people out there. All right. I think people are liking these case studies. I couldn't find anyone interesting to do. So I did Robert Kraft. He owns, obviously, the New England Patriots, purchased them for 172 million in 1994. Today, the franchise is valued around 6 billion and they have six Super Bowl championships. But let's see what happened and how did he actually get to the place he's at as a billionaire worth about 9-10 billion. Um, because I thought this was interesting. I was actually curious myself because when you think about Robert Kraft, you think Kraft Heinz Group. It's not that. He's not affiliated with that. It's his last name, but he has no affiliation with that. So how did he get his money? Well, first of all, he finished his MBA from Harvard Business School, great school, top three school, in 1965. Then he started working for his father-in-law's paper and packaging business, the Rand Whitney Group. He then used a leverage buyout, which is popular in the 70s, 80s, which is taking on a lot of debt to buy companies pretty much. It's not as much practice now, but he used that leverage buyout to gain control of the business in 1968. He then established International Forest Products in 1972. That was a company that trades products made from trees, such as paper and container board. Sounds boring as hell. It probably is, but he was printing money. He grew the business and it became one of the top ranked North American exporters. And then, of course, he wanted to create a holding company. He wanted to create a holding company to get into sports and entertainment, paper and packaging. So pretty much just buying other businesses that he felt he could run better, which he proved that through expanding and growing the business that he purchased. So he bought the Boston Lobsters of the WTT League. I don't even know what the WTT League is, but he and several partners purchased the team. Oh, it's a tennis team, but it disbanded in 1978. 7 years later, he acquired a sizable plot of property. And then how's he acquiring this stuff? Because his business is kicking off a lot of cash flow where he can diversify, buy new things, right? Or he can create a partner. He can get other equity partners in because he also knows a lot of other wealthy business owners. So he can then pull up capital and then make other plays. So 7 years later, he acquired a sizable plot of property in the Foxborough area around the Sullivan Stadium, the New England Patriots home, with the possibility of buying it. He acquired the stadium in 1988 along with a collaborator whose stake he eventually bought out. So, of course, he bought the property with his money, and then another collaborator put in some funds. He bought that person out later. In January 1994, he eventually paid James Bush Orthwin for the New England Patriots. Orthwin purchased the Patriots in 1992. He wanted to move the club to St. Louis, but the plans were stymied. So again, he purchased in January 1994. He purchased the Patriots for 172 million, and now it's obviously worth what 6 billion. They say. He built the team up. Let's give him credit. He brought in right coaches, general management, and he's brought in one of the best, probably the best coach of all time, and Bill Belichick. So he really knows how to put the right people in place, and he's great at investing. Right, all these plays he made were just investment plays and building things up from he saw that we're undervalued. He bought Patriots, saw that this is going to be something huge, and he made it into something huge, and really just built this his own portfolio into something crazy. He of course owns a bunch of other businesses, and I think he invested in the pickleball league as well. It goes on, but this is another example of someone taking a start and building into something bigger, diversifying, doing some things that are pretty impressive, if you ask me. Well, ladies and gentlemen, big things this weekend. One, Errol Spence, Bud Crawford, for the boxing fans out there, if there are any, big fight of the year. We saw a lot of big fights in boxing in 2023. I'm now a boxing avid watcher and a practicer every day. But there's a huge fight this weekend that you must be turned into Saturday night. That's going to be good. If I had to guess, I think Crawford wins, stops him somewhere in the 10th, 11th, whatever. It'll be a good one to watch. It's my own birthday weekend coming up because Tuesday is my birthday. So I'll be kind of relaxing, enjoying the week and the weekend. Hope you all do the same. We'll talk next week.